Hello, ladies and gentlemen, and welcome to a podcast on question 4 of the March 2016 assessment. I'm your host for this one. It's JP Brewer. Specifically for question number 4, what is provided to us is a pre-adjustment trial balance of bite-sized delights. Now, unfortunately, I could not make an exact replica of the question itself, so I had to draw everything up from scratch. Let us just look at this pre-adjustment trial balance. We see that in this pre-adjustment trial balance, we have something called services rendered, meaning that this is a service rendering business. So this will most likely be our main income, which we have to look at. We also have depreciation, we have rent expense, stationery, and so far all of these three items, namely depreciation, rent expense, and stationery, are expenses. We have capital, we have drawings, we have salaries, and we have water and electricity. So just in summary, services income appears to be an income, whereas depreciation, rent expense, stationery, salaries, and water and electricity all appear to be expenses. What we have in capital and drawings, it is part of equity, but it is just capital and drawings. And as we know, capital, drawings, income and expenses all form part of equity. So this is what is provided to us in the pre-adjustment trial balance. We are also provided with additional information. Now, it's not necessarily listed as I have drawn on the board. I'm just going to read to you exactly what it says. Additional information. Number 1, capital contributions during the year not reflected above amounted to 20,000 Rand in cash. If we summarize this, it just means that we have a capital contribution of 20,000 Rand that still needs to be taken into account. For the next additional information, we have services income of 25,000 received in cash has not yet been taken into account. This means that services rendered to the amount of 25,000 still needs to be adjusted and shown in our trial balance. Lastly, the owner, Mini-Me, took 3,000 Rand cash for personal use during the year. If we see anything that is taken for personal use by the owner, it is regarded as drawings, and this 3,000 Rand needs to be taken into account. Specifically, how will this influence our pre-adjustment trial balance? Well, first off, we need to ensure that our services income becomes more by 25,000 Rand. Reason being, we received money during the year, but it has not yet been taken into account. Okay, that is for point number 2. I know I'm skipping over points and so on, but I'm just working from the top to the bottom. The next element which I see, or not element, account, is capital. Now, we also know that in terms of capital, 20,000 Rand was contributed during the year, but is not reflected in the accounts or in this specific balance at present time. So the capital account needs to increase by an amount of 20,000 Rand. The last one is the owner, Mini-Me, took 3,000 in cash for personal use. This just means that drawings must become more by 3,000 Rand. So now we have to draw up, based on the requirements, a statement of profit and loss, also known as a statement of comprehensive income. And for those of you who are still busy with old school, it is called the income statement. Now, I've drawn up something like this. It's called the statement of comprehensive income. I really dislike writing out things in full, so just bear with me for this one. Whenever we deal with the statement of comprehensive income, we need to show all income and all expenses. Specifically, we have the main income of services income. But services income, if I'm not mistaken, changed accordingly. It was 300,000, but we need to increase it by 25,000 Rand, meaning that our new services income total will be 325,000 rand. Therefore, we can tick off services income. We have done that accordingly. When dealing with the statement of comprehensive income, we know that we should list all of the income first, followed by all of the expenses. Based on the pre-adjustment trial balance, there's only one income which appeared, whereas all of the remainder, except for capital and drawings, are expenses. This means that I can now say other expenses. And these expenses I can list accordingly. The name of these expenses are depreciation, we also have rent expense, furthermore we have stationery, followed by salaries, and we also have water and electricity. These are the only expenses which we have based on the information provided. We know for a fact that depreciation didn't change at all. The amount we have to take into account is 50,000. So we can just write for depreciation, the answer here is 50,000. If we go on, we can just tick that off, to rent expense, we see that the amount is 80,000 rand. Nothing changed in terms of rent expense. So we have 80,000. Please excuse my handwriting. It is not one of the best, but hopefully it is readable on the screen. We also have something called stationery. Stationery didn't change at all. It's still 2,000 rand. For salaries, let me just also tick off there. For salaries, nothing changed. It is still 58,000 rand. So we can write 58,000 rand. Followed by water and electricity to the amount of 24,000 rand. This also didn't change much. So if we go to the things which we ticked off now accordingly, we can see that all of the income and all of the expenses were taken into account accordingly. At this point in time, we just take note of capital and we just take note of drawings. We are not going to include it in the statement of comprehensive income because it is not part of income or expenses. When we add all of these expenses together, it should add up accordingly to 214,000 rand. And this needs to be a negative because it's an expense or total expense. The 50,000 plus 80,000 plus 2,000 plus 58,000 plus 24,000 is equal to 214,000. We also know that for the statement of comprehensive income, at the very bottom, we will have net profit for the year. I'm just going to write net profit. The profit for the year will therefore be 325,000 rand minus 214,000 rand, which is equal to 111,000 or 111,000 on the dot. This is the answer to the first requirement. We are also asked to draw up the statement of changes in equity. This will be the statement of changes in equity. We know that equity, as mentioned before, consists of 4 components, namely capital, income, drawings, and expenses. Therefore, we will start off with opening capital balance, followed by contributions, followed by the net profit for the year, followed by drawings, and at the very end, we will have our closing capital balance. If we go back to the pre-adjustment trial balance, we will see that the capital amount before any changes were taken into account was 150,000. Therefore, we are assuming that the opening capital balance will be 150,000 rand, which is exactly the same as this amount. However, during the year, based on our adjustments, we know that capital increased with the amount of 20,000 due to a contribution. So there was a contribution to the amount of 20,000 rand, which also took place during the year. Next up is the net profit. Now, the best thing of this is that we have done all the hard work already. This is the net profit which we are going to use. And this exact amount we just copy and paste accordingly. We just need to ensure that we copy and paste correctly. Therefore, the net profit is equal to 111,000. Exactly the same as what we had in the statement of comprehensive income. Last but not least, we have to take into account drawings. But we know that drawings have an opening balance of 25,000 rand, and we also need to make provision for another 3,000, which the owner took for personal use throughout the year. This means that this 25,000 plus 3,000 will equal 28,000. Hence, total drawings will be 28,000 rand. Specifically, this comes from 25,000, which we had as an opening balance, plus 3,000, which is based on the additional information provided, going back to this particular point. For drawings, we also need to ensure that we deduct it accordingly in the statement of changes in equity. Hence, we are going to say the opening capital balance plus contributions plus the net profit minus the drawings amount will equal our closing capital balance. When we do this calculation, the answer which we get is 253,000 on the dot. Hence, this is the second requirement done accordingly. That is the end of my podcast. Thank you so much for watching. All of the best with your further studies in Financial Accounting 1.